Welcome back, and it's time to talk about Concord Control and stellar Q4 numbers reported by the company. PAT has nearly doubled year on year. The company is also eyeing global expansion, but how is the order pipeline looking, and what's going to be the growth outlook and expansion plans in FY27? Let's get connected. We are joined by Mr. Gaurav Lath, Joint Managing Director, Concord Control Systems Limited. Gaurav, hi, morning, and welcome to the show. All right, first of all, congratulations on the stellar results. But you have seen a mega jump in your order book as well. Now, if you want to just talk more on that, how much of the FY26 order inflow came in H2? And does that momentum continue into FY27?
Thank you so much for having me on the show. And FY26 has been a very, very strong and a defining year for Concord. We delivered 210.47 crores of revenue, 42.65 crores of profit after tax, and an EPS of 42. Most importantly, we closed the year with an executable order book at a combined level of 697 crores as on 31st March 2026. So the story is not only that Concord has delivered strong historical growth. The bigger story is that we are now have a visibility, scale, and an execution depth. So we are building a serious railway technology platform across various propulsion, safety, and diagnostic railway-ready solutions, and we feel that the momentum will continue.
Mr. Lath, also, can metro technologies and German TOT partnerships become a separate high-margin growth vertical over time?
So I think Concord as a whole is not working on only a single product. Indian Railways is going through a massive modernization cycle. Safety, electronics, diagnostics, intelligent systems like the German TOT are becoming very important. And I think Concord is positioned exactly in these areas. And all these different technologies are going to be the growth drivers and will further collaborate together to power the growth engine of Concord forward.
All right. Management has spoken about targeting global railway markets and export opportunities. Now, which international geographies or product categories are seeing the strongest traction today? And what is the execution plan to achieve this ambition?
So overall, as a company, the core of our growth for the next few years is dependent on 5 growth engines, which is the railway technology at the core with the control systems, the propulsion and the locomotive intelligence, then the diagnostic and the monitoring predictive maintenance solutions, and the electronic manufacturing integration through fusion. So all these are global scalable technologies, and we feel that as and when we grow our global outreach, this will help us create a more scalable railway technology company with the focus of being from India, for India, as well as for the global markets.
Mr. Lath, with aggressive growth targets of 40 to 50% CAGR and expansion into embedded electronics, metros, hydrogen locomotives, and global markets, will the internal accruals be enough to fund the growth, or should investors expect equity dilution or higher leverage over the next 2 to 3 years?
As of now, we are well positioned with our Q1 expected cash flows. And with that, we feel that we will be able to maintain this steady growth and will be able to sustain. Though there will be a deeper focus with the current executable order book of 697 crores on our working capital discipline. And I hope that we'll be able to continue this growth and sustain the progress with our own accruals.
All right, Gaurav, management has also highlighted rupee 2,000 crore plus opportunities in DPWCs. So, by when do you expect this business to become a material contributor to revenues, and what kind of market share is realistically achievable, given that there are only a few approved vendors for this?
Thank you. That's a very valid question, and I think uh, the kind of growth and speed which our honorable Prime Minister also expects from the railway is DPWCS happens to be one of very important and a critical contributor to that, and the business has already started uh, giving revenues. In this year also, we have a certain portion of revenue coming from DPWCS and locomotive wireless control systems. And we also have a significant order book for the next year as well. So we'll see a significant contribution of our top line as well as profits coming from DPWCS as a business.
Right. Also, your order book has jumped to nearly 697 crore rupees, which is over 3x FY26 revenue. What are the key execution risks over the next 12 to 18 months?
I think that positions Concord as the overall executable order book is one of the strongest validations of Concord's position today in the railway ecosystem. And uh, it also shows the market opportunity which is there for the railway technologies. As a standpoint, we feel that we will be able to execute it without any hindrance. But our job is now to deliver this order book efficiently, protect our margins, collect faster, and create a long term shareholder value.
All right, Gaurav, thank you so much for talking to us and giving us time and elaborating everything on the earnings that we need to know. Thank you so much.
Thank you. Thank you so much.
All right, with that, it's time for a short break, but then post that more management's coming up to talk on the Q4 results. So stay tuned.